Good morning, everybody. Everybody that's coming in with the note takers and stuff, just FYI, I have got to remove them because they mess up our recordings. Um, so just FYI. How's everybody doing today? Always takes a minute. I apologize, y'all. Good morning. Good morning. Okay, now let's see if we can go live. See, Cameron said nervous. I have a quote review today and it's 3 times their advised budget. I'd like to ask your opinion. Yeah, of course. Cameron, if you want to go ahead and ask, you can ask now while I'm trying to push all the buttons. It's hard for me to start the presentation until I do all that, but I can listen and talk for sure.
Perfect. Thank you. Let
Yeah, no
me
problem.
let me pull this up real quick. So yeah, I had a quote discovery call with somebody yesterday and real estate investor and kind of similar to like my very first quote review where I mentioned before a while back in the call and the person said it was way too much. But this time I have the pricing calculator, so I put everything in there. This person has 11 accounts, so like 8 checking accounts, 1 savings, a line of credit, 4 hard money loans from investors, um, and like I think 6 mortgages. They have 4 entities. They have everything within QuickBooks. I'm not going to be doing, the business tracking because it's their S corps, and I've already told them that. So, we're gonna go from there. But he
Okay.
told me his budget is $500. So I put everything in a calculator, and it came up to like 1,500 per month. So I did look at the books. He doesn't really have that many transactions, but I still would have to be reconciling these accounts. But I wanted to get your opinion to see like, would you discount some of these like really low transaction accounts where they're barely used, but they are there and would be part of the balance sheet? And also like just the complexity of the business because they are S corps, some are partnerships. Well, not partnerships, they're multiple shareholders. So there are some different things I have to consider and worry about. He needs class tracking. So there's a lot of elements to it. But he only has like about 100 transactions per month across all of those accounts because some of them are just like holding accounts where it's not many things coming in and out, but they are still there. So curious to hear your opinion.
So it, I mean, it like without really and truly looking and seeing everything that we're looking at, it is kind of hard to say like for sure. I do agree, or I will say this, I guess. The coding calculator is great, but some of the things it can't see are like what you said. If it has very minimal transactions and those transactions aren't being used. If it looks like the only thing that I'm doing as far as touching those accounts is I like you're saying there's 100 transactions. So that includes like the pay if there's payments to a credit card, there's like a transfer from one bank account to another, those types of things. Because honestly, like if you only have one or two transactions, it should be very easy to reconcile. It should only take a couple of minutes.
Hmm.
So something that I've done in the past is like if you run it in the quoting calculator, you can get one price. Okay, well, it feels like that might be a little too high because there is minimal transactions. Then I'll take it and okay, let me do per transaction. What would a price around that be? If I did per transaction, I usually do like $2 per transaction. Now I'm not gonna, that's just giving you like that's literally $2 to go in, code, reconcile, that type of thing. So if I said that to you, that's $200, but that's also not including all the additional accounts, everything else that you mentioned. So that still gives you, like, if you went with their budget, that still gave you another $300 to play with, I guess you could say. I don't know what else, like, or is that, are you just going to be doing the bookkeeping piece of it? Are you class tracking, or is there any monthly meetings that you're going to be having with them to go over these reports? Anything like that?
Yeah, so it's going to be just basic bookkeeping, but he needs class tracking, and he also wanted to have entity tracking. Like he has everything set up with the businesses, but I've already told him that's just commingling and it's different EINs. They have to be on a different subscription, and I was going to work with him getting
Right.
on to Ledger, for ones that would make sense.
Yeah.
So I was going to tell him that part, but then again, that's me logging into these other entities as well. So that's another piece that I have to track. So it is separate entities. It is class tracking. He has, I looked at his class list. It's about 15 classes. He has like a general class. He has all of his different properties, rental properties, and a couple of other miscellaneous ones that, I was going to have a conversation with him about, but he says he needs that done. Um, and it was like the basic bookkeeping. So the recording, categorizing, making sure the chart of accounts are legit, which everything looks pretty good on my end. So I really wouldn't be much setting up, but it would be class tracking. So I would have to worry about what's going where and that additional third dimensional layer.
Okay. And when you said, like when you initially told me 100 transactions, was that 100 transactions including all these additional businesses and stuff as well?
Yeah, it was like I counted everything in the bank feed that was there, and then I looked at the average number per month, and it came up to like 103 in total. That doesn't account for the loans because I have to amortize the loans, which he doesn't seem to need it on a monthly basis, but he does want monthly reports. So I mean, I guess, but he said he would be okay for like doing amortization at the end of the year. But he has like there's a significant amount of loans. I would have to reconcile all those. I mean, it's not as difficult as like a bank account, but it still would be my responsibility. And he also has like
Right.
tax and insurance escrows that are attached to those, which are separate, and they don't have their own statements. Like it's everything would be on the loan. So I mean, there is like additional complexity to it. So it's beyond the 11 accounts. It is also those 8 loans as well.
Okay. And I mean, so one thing that I would do when you're talking the loans and stuff is I would also add in like the transactions that you would see every month for that. So the payments, the interest, whatever else it, like you have the statements, whatever's also included in each one of those particular loans. So it might just be a handful, but if you have like 3 transactions per month and you have 8, now you're looking at another 20 something transactions added on to that, if that makes sense. Um, I also, I lost my train of thought. Oh, I was gonna say that. Um, I mean, one thing to like, obviously, at the end of the day, and I'm saying this to you, but everybody that's listening as well, you like the pricing calculator is set up to kind of give you a guide on, hey, this is where a lot of people in this industry are quoting this. But again, it can't see everything and fully know how long it's going to take. If you
Hmm.
feel like, hey, this is really, this price is where I want to go with it, you also were on the call with him to know, did it feel like he is hard stuck in that $500 a month? Um, And then another thing to consider, like when I started my business, I would have taken on a lot of clients in certain things that I now would not have. But it was because one, I wanted the experience. Two, I
Hmm.
needed the income coming in and I wanted to be able to work for myself. So even if it made, I was just making a little bit more than when I was waking up my 9 to 5, that was still better than not having it coming in. So you have to like kind of take all those things into consideration at the same time when you're doing these quotes. So like from a mindset perspective and stuff. And like obviously the end goal, like you want to be able to send this quote out. You don't want it to be something that you're gonna like you're gonna sign them for $500 a month and then you're just gonna regret it and then you're not gonna show up and you're not gonna do the work, if that makes sense. You want to be
Hmm.
able to you want to be able to give them everything you can and provide good value, because at the end of the day, if we're saying $500 a month, like most bookkeepers charge somewhere around 75 $100 an hour, so that should take you around 5 hours a month to do the work. Does that feel like that's something capable of doing based on what you've seen when you went in and looked at his books?
So there's also properties where I would have to be getting the HUD statement and translating that HUD statement as journal entries, and that is generally a lot longer and wouldn't be captured on bank feeds. So there's also that piece. Um, so I mean, I really I can't really estimate because I really don't know. I don't really have like a large client base around this field to really know how long it would take me. Probably will take me a lot longer now because, I don't have the high experience. I just have,
Right, you're learning.
yeah, I'm still learning. Um, so it's really hard to gauge. So I mean, I would be willing to go lower. I mean, this person was way different than the previous one, the one that said that, my quote was out of control. So like this person just seems way more organized. They got on the call and I didn't have to chase them around. I know I'll be able to speak to them from time to time, asking questions. So I would be willing to like go lower for this person, especially just like you said, just to get the experience. I just don't know like how low I should go. And if I'm already seeing this says, 15, it said 1573 or something. Like I can't justify like 500, because I don't, if I'm going to do 500, then like you said, I'm probably going to be miserable and, it may really be that difficult plus that. And I wouldn't be able to scale, like get other clients as well. Like I want to make sure that I'm getting paid from the effort and the value that I'm giving. But at the same time, I don't want to like go too hard and, then wouldn't even get the client in the first place. So like
Right.
I was thinking like a middle ground, maybe 1,000 and see. I was gonna let them know like, oh, so I have like something that I use to get me an estimate, and I'm gonna tell you it came out to this. I'm gonna tell them the exact amount, like 1,500. And that's like similar to how you worded it. Like this is what the most bookkeepers would charge. I'm going to take your $500. I have taken your 500 into consideration. I wanted to, have a conversation. This is why I want to talk to him about it and not just send an email. Like I want to have a conversation with you to see what are some things maybe we can take off that, that can just be your responsibility. Like if you want to do the class tracking, maybe you can just do that on your own. And you're just to try to get the quote lower. So I was thinking maybe like 850 and see, how he would feel about that. He actually said that he doesn't really know how to ask for quotes, but I did ask him that question in the call, and he said, I kind of want to be in the 500 range. But he initially told me like I've never hired a bookkeeper before. I have no idea how much they usually
Okay.
charge. But yeah.
So he might be okay with the 800 then, knowing that it wasn't like, hey, I've done this before and this is what I'm paying people to do it. It's just, hey, I have no idea. I will say this, if he's expecting $500, 800 still is a lot if you're expecting, or if you only have $500 in your budget, So do not like definitely prepare for a
Hmm.
possible no or whatever deal with that.
Yeah.
But um I think you definitely like I said, you got to think about it like it's going to be a learning experience. And I just remembered that I did not send you that email that I was supposed to send you. That we
No, no
talked about
problem.
on the call. I just remember because I was going to say, make sure in your engagement letter that you say we're going to reevaluate prices quarterly, because that gives you an out of
Hmm.
like, hey, I can, like, there is more entailed into this than what I initially thought. So like, hey, we do need to increase our prices. So it does give you the option to increase the prices as things go. So like if you did quote at 500, you do have that option to be able to bump him up a little bit or whatever. And
Hmm.
I'm saying 500, even at 800, if you're like, oh, wow, he agreed to the 800, but this is way beyond what I thought it was going to be. So I should have went with the 1500.
Hmm.
If that makes sense.
Yeah, that makes sense. Yeah, I actually did. I looked at my client agreement. It was five
It says that.
pages. So like yeah, and I do have that clause in there. But I know we spoke about, try to shortening it because that might be a barrier.
Yeah.
So I did put it like your advice. I put it into ChatGPT. They give me a smaller one. I'm still a
Okay.
little nervous about it because ChatGPT makes a million mistakes. But I mean, I looked at it. It looked decent enough where it lowered it to I think about 3 pages. It seemed a little bit more manageable to read, less overwhelming. So
Right.
I'm gonna try to go with that, but I'll definitely take a look at what you have for sure.
Yeah, I'm gonna send you, I'm gonna try to, I'm making a note. I totally forgot about that until we were talking just now. Um, but yeah. So is that helpful?
Yeah, that
Um,
was helpful. Yep.
okay. Yeah,
Thank you.
just don't, like I said, and that goes for everybody on here because today's topic is gonna be cleanups. So this kind of goes perfect along with that. But with our pricing calculator, with any price, like it's your business at the end of the day. You can handle it how you want to handle it. You have to also think about like, where are you experience wise? Do you need the clients? Do you need the experience? Do you all of those things? So sometimes it is okay to quote a little bit less, or sometimes it's like, hey, this is what it is, and I'm charging that because, like I said, you don't want to regret it and not show up and not do the work and all of the things either. So,
Hmm.
hey, Sherry.
Good morning.
Sorry, we got off on a quoting tangent to
No,
start
you're
off with, so
good.
we hadn't
I
even got
mean,
on topic.
I was like, oh, but we're already at the quoting point of
No.
um,
Yeah.
I couldn't grandmothers, you don't get to
Right, right. No, totally.
um, okay. So we at the I'm guessing we're at the beginning then.
Very beginning. Yeah, I was trying to start everything up and Cameron had a question, so I told him he could just ask it while I was getting everything live, and yeah,
Yeah, it sounds
here
like
we
it
are.
goes right into the topic. So real quick, if you guys do not know, we are doing a boot camp next week, Megan.
Yes, I have the link actually pulled
Cool.
up.
So if you guys want to join us for that, it is free, and we're going to go into all of the just
Day one is going to be marketing and
actually
niching.
doing it.
Yeah, marketing, niching, lead magnets, emails, and then mindset and conversions. So kind
Yeah,
of going into closing those sales.
yeah, for sure. Today though, we are talking about cleanups. We like cleanups because they bring in extra cash. Like especially when you're getting started, it's really nice to have some chunk of change come in the door. And I know there was one point when I started my business, you guys have heard me say I had 202. You guys have heard me say this as well, that I really did enjoy cleanups from the perspective of I could get in, I got them done, and then I was done. However, they often lead to reoccurring work. So they're really good from that perspective as well. I also know people who only do cleanups. Okay. So we're going to talk about how to spot where there's an opportunity for a cleanup, how to price it, and then how to confidently handle just the workflow of it.
Yep.
Messy books can feel really, really scary, and sometimes they just rightly are. Especially if you're just getting started and you're new to the bookkeeping world. You are learning a brand new skill, brand new trade. it is, some cleanups can be like jumping into a really hefty puzzle that you're trying to put together. Like we're talking 100,000 piece puzzle versus 100-piece puzzle, right? Some are like 100-piece puzzle, and we love those. Those are great. But messy books are also one of your biggest opportunities. If you can spot them and kind of grab a hold of them, they're a really great learning opportunity too. If you're willing to spend the time asking questions, you're going to get most of your education during that period of time. Okay. So cleanups are often a client's like first real pain point. There's a couple that we could argue as their first pain point, you know, getting their books cleaned up for taxes, right? Cleanup, first real pain point. They can be going through a sales tax audit, pain point. They could be trying to figure out what reports to get to like a workers' comp audit. And if they're not organized, that's going to be an indicator that cleanup might be needed to organize all of that. Again, first real pain point, right? So a lot of it kind of boils down to like their pain point is coming from ultimately not having a process in place. And they're stressed by it. They don't understand it. They might understand enough to be dangerous. We see this especially with those that have left corporate and they're running their own business and they understand corporate accounting and they just understand that the accountants ask specific questions, but they don't really fully understand the full cycle of accounting. And so they're trying to like jump in and dictate how it's done. They don't fully understand how it's done. Does that make sense? So there's a couple of benefits to cleanup jobs. So if you found yourself like really hesitant to say, hey, I can help you, but there's a cleanup aspect attached and that has you like shaking in your boots, and probably rightly so, but you're still there, right? Like it's still the reality. They're higher one-time payouts. So if you're looking to build up some reserve in your own bank account, if you're looking to pay off a credit card, whatever that reason is that you started your business, this likely goes alongside of it. So definitely pay attention to them. You build trust quickly. You become an instant expert on their problem. And you're going to become an expert on their problem because you're going to be diving into all the things. We talked last week about one of the worst things that you can do when it comes to like a cleanup or onboarding a client is waiting to ask questions. So in a cleanup, especially if there's a deadline or a rush or something like that, you have to ask questions. You have to dive in and you have to do it scared. I feel like that's a book opportunity, Megan.
Yeah.
Jennifer Alwyn talks about that. But it often leads to monthly work. And one of the reasons I switched from doing the financial analysis that I was doing, which was great because it was pick up, put down, and that's really what I wanted to be doing at that point in time, was then I realized, well, I don't have to work so hard to find, next month's work or next month's project that it's going to be there. And I could just structure my month around knowing that I'm going to, do someone's bookkeeping. So, but it does often lead to that monthly work. So they're going to see if you can do the job. A lot of times they're either going to come back to you for another cleanup the following year, and they're just going to be a cleanup basis. You can choose whether or not you accept stuff like that. I have had clients in the past who have done that. It doesn't, that might last 3 years, but it's not like if you can get them monthly, it's going to last a lot longer. And then the fourth benefit there is it's a great way to practice and learn fast. Right? Like you're going to have to start understanding how Square works, how Stripe works, how all of these pieces connect together in order to catch problems. We do reviews with you on our private coaching calls. So if you're trying to figure out like, did I finish everything? We'll poke holes into it if needed. Sometimes it's not needed, but if there's holes, we'll see them. Sometimes we just don't know enough information, so we're going to ask you a lot of information as we're doing the review. But if there's like major balance sheet issues, we'll see those. And you don't have to be perfect. You just have to be more organized than they are. One step ahead. You can lead if you're at least one step ahead. Okay. All right, so let's talk about what a cleanup job is. I have a video in the Revenue Infusion bundle, if any of you guys have gotten that in the past, on kind of this argument that could exist of what is a cleanup versus a catch-up. For this, it really doesn't matter. Okay, so like a cleanup being, we're going to go untangle what's been done. A catch-up is going to be, we're going to now just actually do the books. Does that make sense? The high level differences there. But really not super important for this topic. So some common signs that you need a cleanup. They haven't, or catch up, so we're just going to use that term interchangeably for this episode. Okay. The books haven't been touched in months. So maybe they've categorized some stuff, but it's not reconciled. It's not done. Like it's either going to look really messy or it's going to look just untouched. Probably like the dusting we all have to do coming into spring cleaning. Everything is marked uncategorized or coded to ask my accountant. Okay. There's no bank reconciliations. So this is different than, when you get a new QuickBooks file, some of you don't know this, but some of you do. You open the file, you click on bank reconciliations, and it takes you to that screen of like, let's start to reconcile the books. And if you haven't seen that before, you're like, oh no, they haven't been reconciled ever. It's just because you're a new user. And so it's like, let's start for you. Once you click through that screen, you can determine when the last time it's been reconciled. If you're going that route, in the Bookkeeper Blueprint, we show you how to like use the overview feature to actually quote. So we'll get a little into that. And it will also tell you when the last reconciliations have been done. Okay. When you look at the financial statements, the income and expenses don't make sense. So if you're looking at the profit and loss statement, often we shorten to P&L or formerly called the income statement. You're going to see like a bunch of just really random income accounts that you're like, I didn't even know you would name something that way. Or, expense accounts that don't make sense, such as like now the category is called Microsoft Office instead of like subscriptions or Office, business platform fees would be an appropriate category. But you're going to start seeing things that just don't look like we've shown you in the course, right? Your job is to do a nice dose of reality check on the books, get them clean, get them categorized and ready to understand. So whether that's to file taxes or for the owner to just understand what's going on in their business, that is the goal. Question on cleanup a client's books for someone in QBO solopreneur that wants to use QBO. Cameron, I might not be understanding the question. I don't use self-employed. I've done that before. I don't like it. Ledger, I'm not, go for it, Megan.
I was just going to say, if they're in self-employed, you pretty much have to start them a new QuickBooks. You can't reconcile or anything like that anyway in there. So I would just start a brand new QuickBooks with them and reconnect, if that's what you mean.
If you want to bring in the prior year balances, like to keep it all, like you can do that. So
I don't think they have the reports though.
So
unless there was an update.
Yeah, the clients on solopreneur, they sell goods, they collect sales tax. They didn't know that there's no balance sheet. So that's one of the things on the diagnostic review. I let them know, and I'm telling them they have to go on QBO to make sure that they're compliant. So they want to go on QBO. So there's an upgrade feature on self-employed, on solopreneur. I don't know if I should be using that or if I should be just creating a new QuickBooks file so I can get them like the 30% off. Because I know if you do upgrade and while you're in it, it still knows that you have an account. And I was trying to get them like the 30%. I didn't know if that was appropriate to do that. I was gonna, because they have like 2 administrative emails. I was gonna have them use another email since they're already starting fresh anyway. So I just didn't know if anyone has experience with it, and if there's even really a point of doing the upgrade. If
If it
does it
will
even
let you
what does it
upgrade,
even transfer? Yeah,
if
sorry.
it will let you do the upgrade, it's worth trying. I know last time I used it, it did not let us upgrade. It was a whole new. We just had to create a whole new like simple
Is that the
start.
same as is that the same as self-employed, Sherry?
It looks like that. It looks like they've
It's the
just
new one.
put a
So
mask on it. It's a
Oh, they just
they just
renamed it.
facelift. Yeah.
they discontinued self-employed and it became solopreneur. But if you were grandfathered with self-employed, you can still keep it because I know another person that has it, but they don't offer it anymore.
Yeah. And so like because I went and pulled it up, it's like explore other self-employed tools. So, but yeah, I think the new one will let you upgrade. I think they did that on purpose because they're, the longevity of the client. If the books are clean, great. If not, we can reconcile to those prior year tax returns and then get them into like a simple start or ledger or whatever you want to use there. Yeah, I hope that helps. But like absolutely, like if you need to start a new one, start a new one. There just might be some just make sure that save historical data. Okay, so what does the actual cleanup process look like? We kind of talked about this last week, and so this is a continuation. So if you're following this series, the last few episodes are building on each other. So if you haven't been watching or listening, feel free. If you want to we've kind of done a series here. So, but the cleanup process, we're going to get access to their QBO online accountant. Like using our accountant, we're going to have them give us accountant user access, not team. And we're going to get access to that using our own firm login. And then we're going to get access to their statements, preferably read-only bank access. We will never get access to a client's username and password themselves. We will always go through them. I will die on that horse, Megan. I just feel like I have to say that like every time because someone
Yeah.
don't get it.
Yeah. Well, and other people apparently teach other things. So
that's so scary. So scary to me. Like just the fraud. Like even Macy's had a fraud case back in like December. Just anyway. Yeah. So if you cannot get read-only access, you're gonna have them get you the .qbo file, the .csv file, and the statements. We're gonna do as much as we can. You could also use something like Ledger Sync. I've used it. It's not my favorite. It worked in a pinch, but it starts to add subscription costs and things like that when they could just pull down information. We're gonna review the chart of accounts. Okay, so we got access to QuickBooks. We're gonna start by reviewing what accounts are in here. Which ones are they using? I like to pull up the financial statements. I like to pull them up year over year, month over month, and kind of just get a lay of the land. What do they think they should be using? Have they even been doing this correctly? Just kind of orient yourself. You just got off a plane in a new city. Where is north? That's what reviewing the chart of accounts does. We're going to start to see what's connected, what's been brought in. And you're going to start with the most recent. So here's what I do. Like if you have a bank account, a credit card, they're transferring money, they're, paying the credit card off based on the bank. I'm going to start with whatever the farthest back month goes. So if we're starting January 2025, I'm going to start in that month, December's been reconciled, great. Our opening balances are right. Fantastic. I'm going to do all of January. I'm not going to do January, February, March, April, May of that bank account. I'm going to do January of the bank account and January of the credit card. I'm going to reconcile both of them. And I'm going to do one layer at a time. Instead of doing like a staircase thing, I'm going to do straight across the board. The reason is you will have, especially business owners in the like first 3 years, the number of bank accounts that they will switch and go through, or payment processors, because they're trying to figure out, how do I get the money the quickest? How do I get the cheapest rates on payment processors? They're going to go through so many different things that if we could just figure out and make sure January is correct, then when we start to do February, we have a clean foundation to do February. And so when something comes up, we're not like trying to guess at where this transfer goes. We know, because now we've done all potentially 10 accounts that the client has had for January, February, etc. Not as a big deal if they've only got a bank account and a credit card, but if they start having 3, 4, 5, 10 accounts, no joke, do it January, February, March, especially if they have a POS system. You're just going to bang your head against the wall a little less there. So now that doesn't mean you have to like, you could categorize January through May. I still like to categorize month by month. The reason is if I uncover something like a transfer, another bank account, I don't have to go back and undo. I'm kind of learning the account as I go. But if I see like 6 Microsoft Office, I'm going to go ahead and code all 6 of those to where it goes. But I might leave the transfers until I can confirm where they are. But you'll figure out like what works for you, like how your brain works and how you want to do it. But as far as like reconciling, we're going to complete 1 month at a time. So we're going to categorize transactions by month. We're going to reconcile the accounts, and that we're going to do month by month. We're going to lay one layer of bricks at a time. Okay. And then you're going to run the new reports, and we're going to compare year over year. We're going to start to compare month over month. Cameron, absolutely. Filter the bank by vendor, or by memo if it's, whatever is working best for you. That way you're going to get all of the Amazon transactions. And if you know that they're commingling, I don't like to leave stuff. I know some of you guys will leave stuff on the bank feed until you get an answer from the client. I go ahead and push it through. That way I can reconcile, and I'm just waiting on the client. So if there's 100 Amazon transactions and I know that the client's going to have to go through them to tell me which ones are business, which ones are personal, just for an example, I'm going to go ahead and code those to wherever I want them. Uncategorized expenses, ask my accountant, Amazon clearing, whatever you want to do. And then I'm going to use Keeper to actually ask those questions, unless there's really 100 of them, and I might still send them a spreadsheet. Because I'm probably going to want to have a conversation like, how are we doing Amazon? But yeah, filter by bank, go ahead and get them coded. I don't leave stuff hanging out on the bank feed. Another reason I don't leave stuff hanging out on the bank feed is you theoretically code it. You're on the bank feed, you code all of Amazon to office supplies. You log out, you get back in, there's a new Amazon transaction. And now you've QuickBooks has done its thing. Well, you've never really coded it. You just selected the account on the bank feed. It's not coded. And now Amazon's like, we think this is office expenses. And now it will adjust everything down. And so you didn't really do anything except waste your own time. So, okay, hopefully that helps as far as like just getting started on the bank feed side of things, like high level view. I do use keeper.app for cleanups. Whether or not you connect it is up to you. I connect them if I'm doing any sort of cleanup or monthly bookkeeping. There are projects where I do not connect them, such as training projects or something like that. Or if it's like a one-time, like I'm gonna clean up the chart of accounts or something. I'm not gonna pay the monthly fee for that. But then we use Equip 360. We use Equip 360 to really continue marketing. So if they're coming to you as a cleanup, we want to make sure that they're on our email list. However, we need to get them on our email list. If we're importing it because they've given us communicate, like they're now a client of ours, right? We want to make sure we're communicating with them and they're getting our emails from like a marketing standpoint, especially if they have not yet signed up month to month. Google Workspace, you can use Microsoft Teams. That's up to you. I like to use Google Workspace for, Google Meet or Teams Meet or whatever you're doing. If you're doing a video call, Google Voice, if like all of those things. But I use it for the drive as well. And so if I need them to upload, like, hey, go check out this spreadsheet, I'm going to actually use a link versus send them the spreadsheet. Often, depending on whatever system works for you, you'll definitely figure that out. But that is something I do. Okay, let's talk pricing, which is kind of how we started the podcast today.
Yeah.
Megan has too. We've experimented with pricing over, oh my gosh, can I say like half a decade now?
Yep.
So
I make 6 years next month.
okay, there you go.
Crazy.
So I know when I started, like pricing really intimidated me. And I took a lot of bad advice because I started like second guessing myself and, quote by revenue, quote by this, quote by that. I do a couple of different things with cleanups. If they're in the first like 6 months, so like I just quoted someone, we're in May, they are super, super, super tiny. I'm actually not charging them for a cleanup because she was like, oh, I'll touch it. I'm like, no, please don't. I would rather not charge you than you touch it. And I don't know if I'm allowed to say that on the podcast, Megan, but like, I was just like, I would rather do this and like just have you sign, like, than because it's just not that many transactions that I'm just like, please don't touch it. I'll touch it. And I used it as like it will help us learn your account. Don't touch it. Like, don't take the time on. But so if I'm doing a full year and it is a ketchup, meaning not the ketchup sauce, but it's a ketchup bookkeeping client and they have not touched it. It's a brand new QuickBooks file. And they have, 1 to 3 accounts, no more. Maybe they have one POS system, but they haven't changed POS systems twice throughout the year or whatnot. Like, I have a super specific, you either meet these qualifications or you don't. If they do meet like a transaction threshold, things like that, I'll do a flat rate starting at $1,200 or $2,400. Is it a catch up or a cleanup? Am I doing 12 months? How long is it going to take me? Etc. Other than that, if it's like during the year and it's not like a whole prior year, so like if it wasn't 2024, I would quote you by the month. Okay, for the cleanup. In the case of this other person, like the transactions for this year were so tiny, like it fell below like the threshold to even care about quoting it. Like it will take us no time at all to do. The other thing I wanted to say, there are some cleanups where they've closed bank accounts. They sound like a hot mess. or they're trying to make it sound too clean. It's not that much. It's fine. It's like, and you're like, you're working too hard to convince me. It's fine. You might consider charging hourly. Megan, I think you've done this more than me. I did this early on and it was like 55. Like I started at a couple of them at like $55 an hour. At one point, I had a cleanup that I had no clue. He didn't even have a clue what he needed. He just knew it wasn't right. And we were going back like 4 or 5 years. So I did a retainer of $5,000. He sent me $5,000, right? Like as a retainer. And I did bill hourly against it for that. And that worked out great. That was fine. I don't think we went too much over 5,000 because it was really like a review, not really even a cleanup. It was really funky. And I was glad that I did it because of how funky it was and how much communication rather than work I needed to do with him, if that makes sense. But so flat rate, charging your monthly rate back or hourly would be kind of your three options there. Megan, do you want to talk about hourly a little bit? Because I know you might have more to say on that topic.
Yeah, I do it a little different than what you said. And then normally
for sure.
the ones that, like, if you have somebody who, if I start looking and they're like, oh, well, I've already touched some of this stuff, so you're not having to do a full cleanup and stuff like that, that's usually like a red flag or the first sign, like, okay, I'm probably going to do this hourly. Because one, they really could have done everything or done most of it, and it really might not take you that long to do it. Or they could have really got in there and done it and screwed things up, and now you have a mess. You've got to go in and untangle and figure out what did they do or what did the system that they connected did and all of the things. So what I usually do with that is I'll start out at 10 hours. I am at $85 an hour right now. When I first started, I started out at $50 an hour, and that's where I am right now. But I'll start out at 10 hours. Usually at 10 hours, and I'm going to say usually because sometimes it's still a nightmare. I'm still trying to untangle. It just depends on, like, was this multiple years? What all has been connected? Stuff like that. When I get close to that 10 hours, do I need to bill another 10 hours? And we're still working through the mess, but I'll kind of send them an email like, hey, here's an update. This is where we're at. We need to bill another 10 hours. I'm not 100% sure how long it's going to take to finish this project, but this is where we stand. And so forth. And then, like, if I can jump in, if I've at that point realized, okay, it's probably going to take me another 30 hours, I'll just let them know at that point. Or if it's looking like it's just going to be a few more hours or this is going to be a huge project, I'll kind of let them know, like, I have no idea, but this is where we're at right now. It's taken tons of time, all the things, and kind of let them know. And then I either bill, like, if I know how much longer it's going to take, I'll go ahead and send them a bill for that, or every 10 hours. It's not typical that I'm sending like a ton of 10-hour bills. Usually I have, unless it's like I've had really large cleanup jobs in the past that it has taken tons of time. But then at that point, as we get more time into it, it might be 20 hours at a time that I'm billing out or something along those lines, depending. But you really, like, I've definitely seen sometimes they're like, hey, it shouldn't take you that long. And those are the ones that, like, hey, if I would have quoted just my monthly price, I would have been in trouble because this took way longer than I thought. And a lot of times it's just you're trying to untangle what somebody else did, not necessarily even the business owner, another bookkeeper, a system, because the system got connected and created journal entries, or sometimes this auto rules got added on there and they created a nightmare with like transfers and stuff. So you just never know. And sometimes it's just trying to figure those things out, and you can't know right off the top of your head, oh, this is going to take me 10 hours to do. So yeah, I've done that a lot with cleanup jobs. Again, I can kind of gauge from how the conversation is going. And if not how the conversation is going, then when I get in and do a review of the books, you can tell, like, hey, this is something that I'm just going to do hourly, or this is something that I'm just going to price based on my monthly rate or whatever.
And I just want to note, like, the monthly rate, because when I said, like, my rate when I got started, I did some jobs for, like, I did one of my first, like, cleanup jobs for like $15 an hour. I then did $35 an hour, thinking, yeah, I was really coming out of like corporate mindset, guys. And then I did 55. But then I also had a client pay me $95 an hour for like video calls to like teach him how to use QuickBooks Desktop. He was a CFO for a business. So rates are fluid. Like when you hear us say the rates, like Megan did tell you her updated rate. But when you hear the 55, like that was years and years and years ago. And it's been a really long time since I've quoted someone hourly. Putting Benadryl on my daughter's arms.
Oh, no.
Sorry. Oh my gosh. I don't know what she got into last night at church, but something. Okay, so that's, let us know if you guys have questions on pricing. Like it's not, one of the reasons it's so hard, like we can help you quote. We can tell you this is how we would quote it. If you get on a coaching call with us, give us all the information, we can tell you this is how we would quote. The problem is what we're quoting is really based on our experience, communicating with clients, doing the work. We know how long it's going to take us or our team or whatever to do it, right? We already know our workflows. We know those things. When I got started, I didn't know exactly what pitfalls I could run into. And so like, I wouldn't have known to trust someone 100% on like, hey, quote this, right, Megan?
Right.
And if you're showing up to the call, well, she said to quote $8,000, and that's not a yes for you. It's not going to be a yes for them until you get to the point where you're like, no, it really is an $8,000 cleanup because of the spaghetti bowl, and I want to quote you $8,000 or hourly. Sometimes doing it hourly will help you get over that. But sometimes you're going to have to say, hey, client, hey, prospective client, the rate is $8,000. And if you could see me, I'm sitting on my hands. And you're going to sit on your hands and you're going to be quiet for a second and let them think, because one of the mistakes bookkeepers will make on a call is the client now gets silent. They're thinking. They're trying to figure out, how much money do I have on a credit card? Can I move money? Do I have to take a distribution this month? Where am I going to put that? Give them a hot second to think about their finances in their head before you start saying, oh no, you're silent. You're silent. I don't want to know. I would do anything. Just give me $2,500. It's okay to be quiet. You have to get really comfortable with silence. It's okay. And there have been cleanups. And that's why I've like really experimented with my pricing. Part of it is experimenting on behalf of you guys in terms of like with my own clients. How can we make this easier? How can we streamline it? All of those things. The other thing is just knowing, like I had a client come to me a couple of years ago. I quoted him $6,000. I had already done a lot of work for them. They came back to me to do the monthly. We had some cleanup. I already knew the like whatever, I already knew the mess, already knew what to expect. I was not willing to negotiate that 6,000. And I think I had some stuff going on, and it was the rate 6,000 or no. Like, and it was a no for them. They didn't want to pay that much. I might have been able to save it, Megan, if I had done hourly. But I already knew the workload. Like it was just, that was the quote. And I'm still confident in that quote that I gave him. And I was, after they said, no, that's like ridiculously high. Like, cause I reviewed it. I was like, did I misquote it? I'm always going to evaluate the no. Always going to look to see, was it a fair no? It was a no for me. And I was okay with that. So hopefully that helps. Okay. Cameron, I see your question. I know we're coming up on time. Real quick, a couple of common mistakes that we see you guys make is you're quoting before you look at the books. You're taking their word for it. They might not know how many, they might not remember how many like bank accounts they've had if they've had a rough year. You're not using a contract or anything to scope the work. You're over delivering or fixing too much for free. I encountered this with someone on a coaching call this week. She was engaged to do 2024. The client started asking her to fix things in 2022 and 2023. Okay, we don't want to fix too much. And then you do all of it in your head. You're not using a workflow. You're kind of spinning your wheels. You're touching this, and then you get distracted by this, and you get distracted by that. So we don't have any plan of action on the cleanup. So just a couple of hot tips there to be thinking about. Do I have a call to go over the quote or just send an email? Guys, once you send the quote via email, like if you don't quote them on the call, you've given the entire decision to them. They no longer need your help to make the decision. You've completely taken a passive approach to it. There are times where maybe that is what you want to be doing. Maybe a season of life, things like that. I try to tell them the quote and try to get them to commit on the first call. If not, I'm going to schedule that follow-up call right then and there. Some of you don't know how to quote, and that is okay. You're going to get all the information. You're going to get their QuickBooks Online accountant access. And you're going to say, hey, I'm going to review all of this. Let's schedule the call to go over it. Then you're going to be bold. You're going to get them on a call and you're going to go over the quote and you're going to have the letter ready for them to sign before they get off the call. That is ideal. With that said, sometimes they don't sign day one. And maybe you could do a discount like, hey, I'm going to waive the onboarding fee if you sign in the next 24 hours. After that, the onboarding fee applies and you'll be charged, month 2 or whatever for that. So you can always like encourage a sign, but we want to do so in integrity. We want to be consistent. I love getting a client on a second call to sign if you're not ready to quote on that first call.
And I'll throw in, I usually just do the initial discovery call and send an email. So
yeah, I did just have someone, I did that too. It was the super tiny one. Just because she was paying $125 a month for bookkeeping and taxes. And I'm like, well, I can't compete with you on like going that low. I did get really close to like a really low rate for her because she is so tiny. However, she also acknowledged she wanted a more high touch situation. You can't have a high touch situation for lower than you're paying now. So I did just send her the email. Like we talked about it. I got her like agreement to it, and now it's just a matter of if she actually wants to like commit to increasing the rate. And I don't think she's there financially. Like, so in that case, I'm saving myself the time if she doesn't want to jump on, if that makes sense. Like, she's worth it. She's worth the time for sure. But, and I'm gonna email her. So if I do that, I do tell them I'm going to check in with them like the following week. So you don't have to be like completely passive. Okay, Megan, any other announcements or anything as we're
I don't think so. I'll drop the link to for boot camp again. It's on Facebook as well, if anybody's
I
watching on
gotcha.
Facebook.
Oh.
And
Yep.
and in the chat here on Zoom. But that starts Monday. It'll be Monday, Tuesday, and Wednesday. And yeah, I think that's it.
Yep. And that one's free. You and I are both doing that next week. So if you guys are like, hey, my marketing still just isn't quite there. Like I'm ready, I'm committed. I'm just not, something's not firing on all cylinders with how I'm setting everything up. Definitely the place to be next week.
Yep.
So. Okay. Well, sounds good. I will see you guys next Thursday.
All right. Bye. Y'all have a good weekend.
Hey guys.
Hey, Mom.